Good morning. It is Friday and it is October 16. We're halfway through the month, getting into contract rollovers next week, Fed decisions, all kinds of things. We had crude going on my bounce yesterday, bounced off that 45 level that I noticed was going to be heavily defended on the point and figure chart, and our opportunities today are with jolts, and believe it or not, price moves on jolts. I was surprised too. And Michigan consumer expectations. So let's see if we can get a jolt pop today. Coming into the market and looking at crude, what we did yesterday was we did break out after we hit this 45 level. And it was very heavily defended. It really popped back up and has a nice hammer, or not a hammer, but a nice wick, bottom wick on the 120 minute. But you see the trend is still down, okay? And we hit this resistance area. Over here we have point of control, VWAP. We didn't get all the way up there. We got right underneath it. It bounced off of this open period, but we did get in that general vicinity and took a first bounce down, and we're hitting the support. Do you see the yellow line? I put the yellow line on here so that you could follow the yellow brick road, but we're coming right in here, point of control, the low. So I'm going to put this line back up here. And right now we're bouncing off this line. We've also got VWAP and point of control on the GOM composite MP indicator. So we're in an area where it's probably going to bounce like a ping pong and consolidate until we either break up or down from this level. And right now I would guesstimate that we would break down because we're still in a downtrend. And we're hitting the weekly, daily 60-15 on my higher time frame trend, which is the 8 EMA. Nothing magical about it, but it works. You want to be hitting these markets in this direction. So I will not be trading longs today as long as my weekly, daily 60-15 stays short. I'll be looking for a break down through this support level to see if this breaks, and then hitting that on shorts. And I want to talk about something real quick on what's been helping me with this volume ladder. One of the reasons I took the volume ladder off my chart before is you get so many false readings, and having the 300 100 helps, but I'm almost wanting to change it to 400 to 100 ratio to even narrow it down even further. But it's almost a distraction to me, but it does help me keep my eye on a current VWAP level relative to price. I mean, I have VWAP everywhere, but the gist of my trading, let me sum it up for you. When you get a market direction shift, I like going on the color bands and not the candles. So if I'm going short, I want to see an up thrust, right, to a level. And the safest place for me to enter is not at the top where you can get chopped up, um, but waiting for these bands to change color back in the direction of the trade. And the best way for me to get back in the direction of trade is when all three of my conditions are met. I can get just one or two conditions met, but I want to wait for all three to get back in the direction of my trade. There was an interview on Chat with Traders about this guy who is a math amazing guy, engineer background, and he's doing programming on machine learning, which is basically counting the number of bars and the direction the bars go. So like if you have a 10-day high-low, a new high-low, he'll either fade it or go long. I mean, it's very simple. Machine learning is just simply chart patterns, and chart patterns are simply how many bars are going in one direction or the other before a change occurs on the open, high, low, close, and that's basically all they're looking at. And my direction guide template is largely based on yesterday's close, today's open, and the 8 EMA, and following the higher time frame trend, which is the 8 EMA, and it works. When it works great. If prices are running away from that direction, then obviously you're not going to want to be participating in that strategy, because that would either be a gap run or something like that. But this math guy was amazing, but he also said something very, very incorrect. He said that if you want to decide where price is going to go, be an economist. And I disagree wholly with that statement. Take, for instance, yesterday, I was prepared for price bouncing off this 45 level, okay? And it happened. So where would you get involved in a trade if you have a trading strategy on that prior open close foundation? You would wait for the strategy to trigger, wait for your retracement, right? Because we're pullback traders. And once those big red bars print, then get back long when your strategy fires off. Now this is a counter trend trade against the higher time frame moving average. So it's a short-term trade because you were trading up to resistance. And now that we've hit resistance, this trade really is no longer operative, because we've hit our target, right? We hit the target and now we're fading back down. So I would be looking for the longs to be coming back in, and I think that this is the direction to trade today, going back long in the direction of the weekly daily 60-15. So I disagree with that guy's statement on Chat with Traders that he said, don't worry about what price does, just get a mechanical strategy and just trade that, and count the number of bars, or I find that extremely boring. I would not get any enjoyment. I mean, cashing checks, true, we can all appreciate that, but isn't part of the fun of trading is being able to understand markets and how they move and anticipate price movements, and then having a strategy to get in that price movement? This profile here that I've set up, for instance, is a closing to closing profile. I figured since we don't have any opens, artificial opens on the RTH, there's really nobody in the pit, and no ding, 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 ding at 8 o'clock in the morning anymore. The market is from 1:30 p.m. Central to 1:30 p.m. Central. So I created a profile chart to help me see where price is trading relative to that value represented by the point of control. And so if it's below the point of control, I want to be going short generally when it matches my weekly daily 60-15. And here we are. We've pulled below that point of control again. So now it's okay to go short, and we're also short our long-term moving average, which is over 50. I have a moving average that's a little bit over 50. So it's okay to take this back down for a retest of these lows. I think a lot of traders are going to come in today thinking that the game is long just because we've stayed above this resistance area, and they're going to be taking it long. I think that's a mistake. I don't think it's going to get very far. We'll see how my hypothetication plays out. It worked yesterday. Let's see if I can do 2 days in a row. So here's how I disagree with that guy. That guy is saying just count your bars. When you get 10 bars, go short. Yeah, I mean, that works. You know, I like 8 bars. I watch 8 bars, not 10 bars. But those have been long-term trading strategies, and there's nothing new under the sun about that. The majority of trading strategies by fund managers or momentum strategies or trend. So the counter trend strategies do work, but I still think that you need to trade in the direction of a higher time frame trend on an 8 EMA to, determine that. Pay attention to your longer time frame moving average over a 50, price relative to that, price relative to where it is trading above or below a value area, this point of control representing value. So if it's above it, only be looking for long candles, and when momentum comes into a market after a retracement, get long. And here's the secret sauce that nobody talks about. Nobody tells you, how is it do you make money? Well, you keep your profit targets small. I mean, if you run an optimizer on your strategy, be looking for small profit targets. I like 14 ticks in crude. Take my 14 ticks, take my trade off the table, bring it to break even, and let a runner go. But that way I'm getting my piece of the pie. And when you wait for a flush down at support resistance, right? Here's support resistance. You flush down to this area. Turn this indicator up. Here's support resistance. Price is above the value area. Price is above the long-term area. You buy. I mean, it's not rocket science, right? Then you buy and you take it back up. This is a short-term counter trend trade in against the direction of the longer, higher time frame bear market. Okay, so we were counter trend trading up to the bear market, and then we hit the resistance areas and we've pulled back. Now we're testing the support area, and price has rolled. We're now back below our long-term moving average. We're below the previous point of control. I'm looking short. So this is a dig, I guess. I wanted to say I appreciated hearing that guy, his chat with traders, but I disagree wholeheartedly. You have to have a sort of understanding of where the market's going, in my opinion. You can't just, not have a trade plan. But what he said generally about having generalizations, I loved. I mean, I did glean something from his talk. He didn't give very specifics, but he did say if you just have an area, you don't have to be perfect, right? You don't have to pinpoint exactly one line on a bar, 46.79. You just generally have an area, and then you wait for your trigger bar, and then you go. So it's like, I loved that. And how I adopt that for my trading, I just showed you a second ago. is when these momentum bands change. So I generally am going up. I can stay with the trade for as long as possible, trailing it and pressing the winners when they're moving. So I have my 14 tick initial profit target. I trail behind, I move it to break even, trail behind these pivots, and then trail it up and take it for as far as it will go. And then when you get a color band change on momentum, that's how I use my momentum, and this is that generalization area, I wait for my color bands to come back in and I try another trade in my time zone. I'm not trading the Asia session. Let me bring it back to a different area of the chart so we can see what I'm talking about. So if you're going short, you wait for that pullback, and then when the bands change color back in your direction, that's your stop goes behind that last pivot and you take it back down. That's your signal to take it back down. So your risk is where that last pivot is instead of an artificial pivot, 14 points, right? So you look 14 ticks from the low. So let's do a box. Oops, let me do a box. So 8, here's my entry trigger. Right here, you draw your box. So that's your 14 points. Oops. So there's your trade zone, right? And if I get a color band change in this trade zone, I can take the trade. That's where I want to enter back in the direction of that trade, of the original trade, which is short. And that's when that's 55 ticks after my first thrush. Wait for that pullback and then get back in. There's nothing magical about that. That's how you do it. This is how people trade support resistance. They wait for a pullback and then they can hit all these re-entries into this box. And you're trying to bring your stop behind these last pivots. This stop would have gotten knocked out, but then you could have gotten right back in. So that's trading. That's how I'm using my 1, 2, 3s and going in the direction of the longer term trade. So be specific, help people, show them how you're trading and how you're using your tools. But the generalization, you don't have to be exact. You just get an area. Here's that circumference he was talking about. Just find a general area that you want to engage and then engage. And that can either be a green-red support resistance. And if you get knocked out, get back in. Okay? But none of these, if you had used this first pivot as your pivot, the longest trade for that 14 ticks, you never would have gotten knocked out on any of these. And you would have had a clear winner. And that's that. So that's what trading is about. News is so important because you can get a news event and trade those breakouts of the last pivot high low before the news event. The first breakout of that pivot in the direction of the after the news event, you go in that direction. Hopefully it's in the direction of your market analyzer, of your higher time frame, weekly, daily. For the highest probability trade, and go with it. So news events provide the opportunities, and location, be aware of where you are in your chart. So if he calls that me trying to be an economist that I picked 45 yesterday to bounce out of, there's no way I'm an economist. I have no friggin' clue. I'm just saying you can look at a chart and see which areas are going to provide the most resistance or support, and then be ready to respond at those levels. And that's what trading is about. So I'm sorry, I'll get off my soapbox. Let me know if you would like me to talk to anyone about this more fully, and I'll be glad to. And how to code Bloodhound to get your strategy set up. Even if you just want to code a level in Bloodhound and say that you want to respond off of a level at 47.50, once price hits that level, you can set up a trade to respond at that one single line. I mean, you can narrow your focus that singularly if that's what you want. Many ways to trade this, and traders are right now trying to break through this level right here, okay, and bring it back down into the prior value area. So this will be a ping pong game back and forth, and I'll have to pull this up on the smaller time frame chart and come up with these trading opportunities to get short now at retracements. So I don't trade breakouts. I wait for the retracement, and then I'll get back in. Thank you so much.